The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 20th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with beautiful, empowering beliefs, what I call the 9 rules of the universe. The universe, on a consistent, ongoing basis, is always saying to us these 9 things. Number 1, it's saying, hey, Steve-O, if you don't move, I won't move. Or said another way, if you sow, you can reap. But you first got to sow. Number 2, it's always saying to me, hey, unless you change what you are, you will always have what you've got. The universe is always saying to me, hey, look, the way you do anything, I guarantee you, it's the way you do everything. It's also saying leaders are readers. And therefore, it begs the question, what's the last book you read? And when did you last read a book? It isn't what the books cost. It's what it will cost if you don't read them. The universe says to me, it says to you, it says to each of us, number 5, don't say, if I could, I would. Get rid of if I could, I would. Say, if I can, I will. Number 6, wherever you are, be there. That's a beauty. Hey, if you're here right now with us at TFNN, be here. If you're working, be at work. If you're with your kids, be with your kids. If you're golfing, golf. Wherever you are, be there, folks. Number 7. Oh, this is a beauty. The universe is always saying to me, hey, don't set your goals too low, because if you don't need much, well, you just simply won't become much. Make sure you teach that one to your kids out there. At number 8, and this one, this one's a biggie. Happiness is not something you postpone for the future. How many folks do you know out there, they're not happy, and they just simply are postponing it for the future? Happiness is something you design right now for the present. What is it that's going to make you happy right here, right now? And finally, number 10, time. Number 10 almost sounds like the David Letterman show out there, and that's not what the intent was. Because the universe doesn't have 10 things. It says 9 things to us, and the 9th thing is time. It says, hey, time is your most valuable asset. So don't waste it. Don't kill it. Don't spend it. Instead, invest it. Yes, folks, respect the rules of the universe, and guess what? They will respect you. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading off 65 points, trading out at 16,446. S&P down about 7 points, trading at 1878. NASDAQ down 23 points, trading out at 4103. Russell 2000 off 14, trading at 1100. Almost even Steven out here. Our call number is 877-927-6648. Feel free to give us a call. Happy to take your call, answer whatever question I possibly can. Let's begin the day. I didn't get last hour. I didn't look at Goldilocks, silver, light sweet crude. Heck, I didn't look. I just babbled. Of course, it was really good babbling. So if you want to go catch really good babbling, just go catch the archive on Channel 9. Remember, the archive of this show is on Channel 10. Of course, you can get it by downloading it on iTunes out there. We got all types of ways for you to stay connected here with TFNN. So let's take a look at Goldilocks right now. Gold trading up $1.20, trading out at $12.95 out here. Let's go take a look at its chart pattern. And this thing has really been consolidating sideways for the most part since the May, the middle of April out here. So a full solid month, more than a month, really been consolidating sideways. It can't get above, for whatever reason, that evening star pattern out here at May 5th high, 13.1580. Nor can it actually get below the lows out here at 12.7740. Yeah, it can have an intraday push, but that's it. It's just an intraday push. Otherwise, that level acts as support. So you got a little bit of a consolidation, in essence, going on. We can draw on that consolidation. Let's go see what that consolidation looks like here. Let's That started really right about here or so. It's a little bit more than that area. What it says is that the next move up or down outside of that consolidation is a measured move equal to or greater than that consolidation point. But at this stage here, volume-wise, let's see, what did we do yesterday? Yesterday, 116,000 contracts. The day before, 147. The day before, 120. The day before, 120. Today, so far, about 83,000 contracts here in the gold in the gold contract, and it just seems like not very wide price spread at all during the last month or so inside of Goldilocks. And so, what does that mean? That means really one of two things. If you're watching this on Tiger TV, it either means an A to B equals CD up could unfold, taking price up to the 1480 range. Of course, it's got to break the B point of the A to B equals CD to the upside, and that would be March the 17th, and that price point is 1392.60. Or, quite frankly, it's forming an A to B equals CD to the downside. The A to B equals C to the downside, well, that looks like this, really. That would have to take, let's go ahead and take this as the A to B equals CD to the downside. That takes you 1217, 1186, and I don't see a direction here. I see nothing more than a sideways move, and that is a direction. It's just not a real easy trading pattern from a direction standpoint. If we take a look at Hi-Ho Silver, she's up a nickel right now. She's up about 0.3%, trading out at $19.40. So I can see I got to get rid of that trend line out here. That trend line doesn't really enthuse me. What we have here, the red line on my screen, happens to be the resistance area of a very long-term descending price channel that silver has been inside. It continues to get thrown back by that. And now the 200-day exponential moving average, the 50-day exponential moving average, the black squiggly line going across my screen, that's priced out at 2105. That happens to be its resistance point out here. Right now, trading out at 1941. I don't see a whole lot inside of Goldilocks or silver out here. Let's go take a look at light sweet crude. Let's see if we can find anything in the black gold, the Texas T. Well, what we can see here is a 0.786 Gartley sell pattern. That's the June contract that we are looking at. That's coming off of the doji high from April 16th out of 104.10. The low is down here on May 1st, out at 98.74. So the 0.786, and a beautiful pattern out here because you've got a 0.786 retracement. That's off of the X point. That's the April 16th high, down to the low on May 1st. You've got a 2.618 expansion out here. That's the expansion of the high from May 7th. That's out at 100.99, down to the low on May 9th, out there at 99.71. Leonardo DiCaprio, Fibonacci. De Pisa, really. It's Leonardo de Pisa, right? Fibonacci. He would be proud of these Fibonacci numbers, how they showed up on the screen out here. No bearish reversal signal yesterday. Maybe we get that today. We get that today, which would be a close below. You'd like to use 101.97. Look, it's a little dark cloud cover at this stage. That just means the weather forecaster looked out his window. He saw some dark clouds out there and said, hey, it might rain. And it may rain on light sweet crude's parade out here, but the better storm that would be brewing off in the distance would be today a close below 102.13. You're trading at 102.23. That shouldn't be too tough. That would give you a bearish engulfing. That would be like coming up to you, giving you a big old bear hug, sucking all that oxygen out of your system, and then the following day a lower close would cement that pattern, which may be an A to B equals CD to the downside out here. But we'll see when it comes to light sweet crude. Let's check in on bonds. Let's go see what James Bond, 007, it's the 30-year Treasury. Let's go see what it is doing. Let me refresh my screen out here. Trading out at 137.01 out here. Still pretty long and strong when it comes to the 30-year Treasury. What is interesting here, let me go back to the continuous contract. I should have it up here somewhere. It's not that I wanted. I wonder if I somehow blew that whole thing. There we go. Yeah. So here's the interesting thing about bonds. Take a look at the consolidation that it broke out of. This is a big consolidation pattern. This is the one that went back to 2011. Lows right around the 132-ish range, right around 132. Highs of the consolidation pattern in the 152-ish range out here. And price broke through that level, tried to get back in, rejected that area. But now price is back in there. So very interesting. If we take a look at A to B equals CD patterns out here, let's take a look at the large one out here. Let's take a look at the 0.618 Gartley buy pattern that really has worked. Remember, there are always 5 outcomes of every Gartley pattern out here. The ultimate outcome is that the Gartley pattern turns into an A to B equals CD. What do I mean by that? Well, if you take a look at the Gartley pattern we're looking at, and it's a continuous contract that we're looking at on my screen. The December 31st, 2013 low, 127.23. The high out here is back in the top of the consolidation on February 4th, gets up to 135.02. The C point now of the A to B equals CD becomes that Gartley buy pattern that formed on March the 7th. And lo and behold, the 5th outcome of a Gartley buy pattern has been achieved. It was achieved 3 trading sessions ago. I didn't know that. That's a beautiful thing. That was when price objective was 137.31 out there. Got up to 138.04. Now it's backing off a bit. Of course, if we take a look at the bottom of Stevie's chart, you'll see that price relative strength. Well, you'll actually see the RSI indicator. That's all that you'll see out there. And you'll see that as price was completing the ultimate outcome of any Gartley pattern, it was also in the overbought condition. Thus far, the back off has been on relatively light volume, I believe. 534,000 contracts on May 16th. Yesterday, 305, so backing up kind of lightly. Today, so far, 144,000. But it has achieved the ultimate outcome. And I would have to say that at this stage, in order to get bearish again on bonds, assuming that you're not trying to sell the top tick, and if you are, you missed that at this stage because it would have been on May the 15th out here. You probably got to wait for a trend line or something to be broken out here. And when I took a look at the actual current month contract, I was showing that little rising wedge. I'd have to say on the continuous contract, we're probably looking at around the let's use the breakout session from May 14th out here. Looks like a breakout. Nice wide-ish ranging bar out there, right around the 135.28. You get down below that, and you probably run down to the bottom of the longer-term trend line. That's the one running back to the December 31st time frame out there. So that is what's going on inside the 30-year Treasury. Let's go check out the ETF structures out here. Let's go take a look at the diamonds, the spies, Lucy in the skies, with diamonds out here. Let's take a look at the diamonds. Let's go see what it's doing. It's the weak link, by the way, in the market as we speak. This morning looks like coming down, trying to test that 50-day exponential moving average, actually priced out at 163.88. Low so far today, 163.97. Good enough for me if it's good enough for you out there. So far, that has acted as a support level. We'll see if it can continue to act as a support. Of course, we know that the diamonds have that very nasty bearish pattern out here. The island reversal top at all-time highs with volume off of the highs out here. That says the diamonds have got a lot of work to get through that supply side chain, which inside the diamonds would be at about a price point of 165.87 out here. We'll see who's going to win this battle, the bulls or the bears. The Dow is off 52, S&P down 5. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 67. S&P is down 6. Let's go check in on the SPY out here. Yesterday we had the SPY moving higher, testing the bottom of that island reversal pattern. That's the low from the May 14th trading session. 189.88 got up, tested that level, got up to 188.89 out there, and then closed out at 188.74. Volume yesterday, 63 million shares. Really going into the downdraft, though. May the 15th, 154 million shares. So pulling it back this morning, likely to find support if, in fact, the SPYs, if, in fact, we see the market sell low today, likely to find support at its 50-day exponential moving average at 186.71. This is the price point that has acted as a support area ever since the April 16th time frame. That's what's going inside of the SPYs. If we look at the Qs out here, the Qs yesterday moving higher into a swing point with volume, slightly more volume. 30 million shares was May 13th. Yesterday closed inside that swing point with 32 million shares. What happens when you close inside a swing point with volume? Yeah, usually you go test the highs. That says that we should see the high of May 13th get tested. That would be 88.61. And that is 30 million shares out there. You get a close above 88.61, and guess what? Now we got a price move up to 89, probably more like $90 out here. So it's the Qs we certainly want to be paying attention to. Of course, inside the Qs, you've got what? You've got Google, you've got, you got a lot of companies, right? Inside the NDX 100, you've got 100 companies out there. But it's Apple, it's Google, Priceline, stocks like that we want to focus on and pay attention to, just simply because of the weighting structure out there. But in any event, expect a test here of 88.61 inside of the Qs out here. And it does really look to me me like the Qs want to move higher. 89.68 out there. If we take a look at the IWM, nice showing yesterday. The small caps showing up to the game early and just simply, playing a nice game yesterday. Volume-wise, though, IWM yesterday, 35 million shares, moving into 76 million shares. Yeah, it closed inside there. But unlike the Qs that we just looked at that closed inside a swing point with volume, its message not as clear. It said, hey, I like the move out here. Of course, what the IWM did was hit a nice retracement level. That is for sure. Down to the hammer candle from the swing point high, 110.90 is your 0.618 retracement area. It actually got up to 111.04. Closed out at 110.75 out there. Pulling back this morning so far on 14 million shares out there. Let's see. I think we took a look at each of the ETF structures here. You know, it's kind of interesting. I don't know if it's interesting or not, but let's go do it. Let's take a look at. Let's go put up the Stevie Rhodes momentum indicators here and get a feel for what's going on inside the charts. I'm going to go take a look at the. Here's the tool that I use to give us a glance at what's going on a weekly and on a daily basis. Always good to see what's going on multiple time frames, you know. So let's take a look at the XLK. Let's start with the largest, since we were taking a look at the Qs and the message inside the Qs. Let's go see if there's any messages inside the XLK. I really should be paying attention to this. Not that they're one and the same out here, but let's just take a look at the messages that we have out here. Now, if we take, I'm going to pull this back a little bit longer here. If we take a look at the weekly chart, right, the longer-term time frame inside of the Qs. The Qs gave you on a weekly basis. Let me put my crosshairs up here. It makes it a little bit easier. Almost sounds disgusting, doesn't it, using the crosshair? In any event, if we take a look at the week here, shooting star week of January 26, 2013. First, the Qs gave you a nice bullish signal, Rhodes momentum buy signal. It did it the week of November 24th, 2012. And quite frankly, since that time period, the Qs, the XLK, I got to get my focus here. I'm looking at the technology sector of the S&P 500. The number one weighting structure, by the way, inside the S&P 500. So the message of the weekly chart gave you a buy signal back in November of 2012. Nice buy signal, and it has never let up since. We've seen some pullbacks. You know, and the biggest pullback was the week of June 22nd, 2013. All that did was just get us to a cautionary zone and gave you another Rhodes momentum buy signal the week of August 2nd, 2013. So even with, obviously, look, the S&P 500 is, other than the SPYs forming a island reversal top, the weekly chart is saying, yeah, so what is it? So what's your deal out here? So the weekly chart is showing still very strong strength out here. Let's pull this back, technology sector now. Let's get a little bit closer look and see what we see out here. And pull this back. And what we do see here is this little hammer candle right here, May 9th. You see a little hammer candle? Of course, the very next session on the weekend, we come back and the market gaps up. That's still bullish. So the numero uno sector inside the SPYs out here, it's in pretty nice bullish mode. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released.
The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 58 points right now, and our man Crazy Carl, of course, that's his code name out there. Wants me to take a look. He's got his holster out, and he wants me to take a look at Smith & Wesson SWHC out here. So let's take a look at Smith & Wesson for our man Carl. Let's take a look at it using all of the tools that we have available to us. So let's start off using the Rhodes Momentum Indicator signal out here. The weekly chart for Smith & Wesson is in long and strong mode out here. The light blue area of my screen on a weekly chart or a daily chart is a strong bull mode. The old resistance level on a weekly chart was the April 11th high. It formed a bearish engulfing candle. That high is 1497. And 1497 ought to be a decent support area. So Carl told me where he bought it at, but he didn't tell me where his stops are. So, Carl, we're going to do this for you. We're going to give you a couple of different spots for you to take a look at the stops. Number one, you might take a look at that high. We're just using that right now as a potential premise. That is 1497. Don't use that as the stop. But if you saw a close below that, we'd really have to take a look at volume. So let me grab a sheet of paper here. I'm going to write some things down. We'll take a little note. So 1497. That's a weekly thing, because if I try to do all this in my head, if I try to solve problems in my head, well, I'm good at solving in my head. It's just a matter of putting them down on paper, and then things get really focused out here. Now, let's look at the daily charts. The daily chart, what do we like about the daily chart? Number one, price came down recently here and tested tested, or it came close to testing the 50-day exponential moving average. That's a black squiggly line going across my screen out there. The low on that trading session, which was, by the way, May 16th, 1473. And Carl, what it did was it formed your favorite candle of all, and that is the hammer candle. Now, the low of that session is the one we really want to take a look at because it closed below a hammer candle. If you're long, you're wrong. And that price is $14.73. So whereas we got $14.97 on the weekly, $14.73, and because it's a hammer candle on the daily chart, that's really got to be the number that we look at out there. Daily hammer, and that says it closed below that. And if you are long, what you'll likely see at this stage, just looking at this chart, I'd have to pull it back further, but you could easily see it move down into the 200-day exponential moving average right around the 1268 level. And that's some pain that you don't want to take out there. So that's what that chart is showing. But, you know, we've got more. We've got tools available to us like never before. Let's go take a look at Smith & Wesson. Again, the ticker symbol, as I recall, is SWHC. So let's go take a look at, SWGC is not going to give us the symbol that Carl is after, nor is it after the symbol that I want. Smith & Wesson, SWHC. Now, let's take a look. We're not going to pay attention to the intraday charts because Carl's not trading this on an intraday basis. But let's come back. Let's look at daily and weekly out here. So daily chart, using the TAS signal box market profiles. Oh, really nice out here. In fact, if you were to see a pullback inside of Smith & Wesson out here, now we'll go take a look and see if we can find any high volume highs or anything along those lines here. But it looks pretty good. Oh, you know what I need to do? I need to get my cursor out here. Let me just do a quick edit on this chart, get that so that it's visible for the show, always visible. Let's take a look at the cursor lines out there close. Okay, we're good. All right. If we do take a look at this, it did form. It was forming a price relative strength divergent pattern out here, and that was the one that formed and confirmed on the trading set. Formed on May the 12th. It confirmed on May the 13th. But the nice thing is, if we take a look at the TAS signal box out here, so you got a price relative strength divergent pattern, one of Stevie's favorites out here. And it formed and it pulled back into the support level, the unfair low of the TAS signal box. Pretty cool, because that was that TAS signal box, that market profile, that support level, that unfair low at 1481. That actually had formed on the weekly chart. This is a daily chart we're looking at on May the 5th out there. And what did price do? It got down to that level, got a little bit lower, but it went ahead and formed a hammer candle. So you should have pretty good support at 1481. So here's the cool thing about, because what I'm most interested in any type of trade, it really is how much can you lose. So here's what I'm suggesting that you do, Carl, because on the daily chart, you're looking at 1481 or 1473, the low of that hammer candle. And if you see the market close below 1473 for sure, you got to make a mad dash. You can always get back in, but what would likely happen is you would likely get an A to B equals CD to the downside. So let's go take a look at that, because it's probably pain that you don't want to experience. So I want to take, you know where your trade is at, you know where you got in, and now we're giving you stop management. I want you to go ahead and if you would have taken 1% of your trading account, let's say it was $100,000, so it's $1,000. I want you to take $1,000 divided by the stop. The stop means where you entered versus this. Let's call it 1460. Let's use 1460. If it closed below 1473, you close out even if price doesn't get down there. So use that as your stop and figure out how many shares it is that you have. That's what should be your position size. If that's not your position size and you're really overweighted in this, you should consider just closing it out and getting back to the appropriate trade out there. That is the first and foremost element of trading. It is called money management. When you get your eyes, your ears, your heart, your soul wrapped around money management, you're going to stay in this game forever. Isn't that a cool thing? Think how hard you've actually worked. You could stay in this game forever if you use the 1% rule. So that's the downside risk that you have here. If it breaks that low, probably headed towards the 1398-ish type area. The 1 A to B equals CD would take you down to 1437. But you break a hammer candle, I say, nah. You're going to move all the way back to the most recent swing point on the daily chart. That's April the 25th out there. Now, of course, the real question is, hey, what's the upside action out here? So let me get rid of that A to B equals CD pattern out here. Let me do that. And your upside action would be to take out the swing point for May 2nd. That swing point has got volume of, looks like about 2.4 million shares out there. And the price high, let's go take a look. Let's actually put the A to B equals CD. Here's what the A point would be on this A to B equals CD. This is what I would use. I would use the low down here from the trading session of April 11th. I'd come all the way back to that low, April 11th. That's my A point. My B point is that swing we were looking at from May 2nd, and your C point's going to be the hammer candle. And the hammer candle is going to be C. So at let's pull this down here. At 1620 is your B point. You want to see now what you've got at 1597, and this is going to be a real key for you. 1597 happens to be the ceiling, the unfair high, using that TAS signal box system out there. So you want to see price get above 1597. Does it mean you have to sell if it doesn't get above it, if it tested and rejected? No, but you haven't gotten the full-out momentum bullish signal out here, and it says that price can move back easily to the 1481 area, just travel in that consolidation. However, you get a close above that, 1597. More so, you get a close above 1620, and if you do it with volume out there, your 1-to-1 A to B equals CD to the upside takes you to about $17.28. So what I want you to do here is I want you to have a bracketed order. Get your position size correctly, and then figure, if you haven't done this, go back into the system and make sure you got your exit plan on both sides of the trade here. I think we use like 1460 as your stop, and I want you to use 1720 as your exit. Don't use the exact 1728 things. That's trying for perfection. Perfection is the absolute lowest standard because it can never be attained out there. Remember, you can always adjust your stops. So that's on both sides of the trade while you are in that trade. But just go ahead and get that in place. So that was for now. Let's take a look at the weekly profile system too, just for the heck of it. As long as we're over here, the weekly profile looks pretty good. I like the weekly profile because it says 1509 is your unfair high and you're above that. So the weekly system is giving you the all-out bullish signal, and that is in Smith and Wesson out there. So I hope that helps our man who likes to be called Crazy Carl, but I don't think there's anything crazy about him. In any event, of course, I've never met Carl. Let's take a look at, we've got our man Don H. He wants to take a look at Yahoo. Says Yahoo's got a gap down on May 7th, may want to close the window. So he's taking a look at the MetLife. Well, as long as we're in the TAS signal box, let's start off by taking a look at MetLife using this tool. MET is the ticker symbol out here. So let's go see what Don is taking a look at. If we take a look at the daily chart out here, let's see. Yahoo. Oh, he says Yahoo has a gap down. Wait, what the heck? Take a look at what I'm looking at to get these. Okay. So where did I come up with MetLife? Maybe. Well, let's do this. Maybe I just can't read very well out here. But let me just take a look at Yahoo. YHOO. Because that's where he's got more information. He says a gap down on May 7th, may want to close the window. So let's take a look at what the daily chart here for Yahoo has to say. So we'll just do a fast reverse there of what I was talking about. And you know what? We're just going to take a look at MetLife anyways if we have time out there, just for the heck of it. Now, if we take a look at the Yahoo, May 7th, so I got to go find this gap down on May 7th. Where is May 7th out here? May 7th. Oh, okay, right here. So he's thinking it may want to go close that gap to the upside out here. Okay. Let's take a look at what we can see here about Yahoo. Number one, it's a TAS signal box. It's got a unfair high out here that's below 34.69. So, Don, if you're looking at the trade here, what you really want to see on a daily chart is you want to see Yahoo get above the 34.69 area. If that happens on the daily chart, it's giving you a potential momentum play, and you're probably right here because volume on that gap down, that supply level, it probably doesn't get much above that high out here, which is a price point of 35.99. That was volume off of a high. There was a sign of strength in here. This is back on trading session of April 15th and 16th out here. That had volume of about, 61 million shares versus a downdraft of 66 million shares. So Yahoo could really just be consolidating. Potential support inside Yahoo looks like right around the $33-ish mark out here. It says 33.26 is the new signal box. That just actually formed today, but I'd have to say just a little bit lower on its daily chart. And that is on, let me just trying to shorten this chart out here. Let's see if I can do that. Now, in the case of Yahoo out here, let's take a look at its A to B equals CD down pattern. Let's see if it's completed. The A point inside Yahoo was the swing from January 8th That's your A point. We'll come back and give you the prices here. I got this, just fills in. Your B point is January 30th, and the C point was up on March the 5th. The 1-to-1 A to B equals CD, which was a price prediction of 32.88. That's what it actually hit, and when it got down there, that actually found support at that TAS signal box area. So it did find support on its move down. That is on the daily chart out here. Of course, it also bounced. It had you can see on the bottom here, I'm working with a guy who's got some nice tools that are built out here. That's one of the reasons why I mentioned yesterday I'm working on building a new trading computer for a number of different reasons. One is to be able to use on the show as well. And if you've been with me, I've had a few speed issues or data issues, and I've determined that it was really the power inside of my computer that was causing that problem. So there's a number of different tools inside the eSignal charting application I'm going to be sharing with you over time to show you how to use that. I just want to do it where my system doesn't freeze up where I'm on the air live. It's no fun for me. For you, on the other end, I don't know whether it's fun or not, but I can guarantee you for me, it is no fun. So in any event, there's some tools out here as well that I've been working with an individual, some patterns, some harmonic pattern tools. I've got the one working right now, which is, one of my favorite ones. Now, it doesn't work the way that I teach it out here, so trying to see what we can do to change it for the way that I believe that it works the best. Nonetheless, this one here would have worked the way that I would be teaching it, and it did also, as it was confirming that A to B equals C to the downside, was also making a price relative strength divergent pattern out here, and we saw that little bounce. So looks more like a consolidation pattern than anything else. That's what the daily chart says for Yahoo. If we take a look at the weekly chart, it shows it should have some pretty decent support at 32.95. It gets below 32.95 on the weekly chart, and probably your price target ends up being somewhere in around the 29-ish type range out here. That is on Yahoo. So I hope that helps from an analysis standpoint of what's going on with inside that equity for our man Don. He may or may not have asked for MetLife, and whether he did or he didn't, he's going to get it anyway. So let's go take a look at MetLife. MET is the ticker symbol. Let's go see what it is doing. Let's take a look at it on the daily charts out here. Let's see what we can find. Let's take a look at any kind of patterns out here. Could be forming, if it breaks through its support level out here, which on the signal box is going to be 49.15. What this could be forming here is this could be forming an A to B equals CD to the downside. So if it takes that area out, the B point out here, which it would be taking out, is the April 14th low. The C point out here happens to be the trading session of April 30th. If they can take out the B point, 48.75, also a close below 49.15. That says that what is likely to happen with inside of MetLife is a move down to about the 46.55 range. Right now, MetLife trade down to 49.15. That is the daily chart. MET is the ticker symbol out here. Let's take a look at the weekly chart for MetLife. MetLife says 47.75 is its unfair low and its support level. So if you put that $47 there, whoops, I didn't mean to do that. What I meant to really do was do this, $47 versus the A to B equals C, that's at 46.55. Yeah, that looks like a pretty decent level of support for MetLife out here. Right now, we've got the Dow. Let's go see what the Dow is doing. It's off 45 buckaroonies. S&P is down 5. NASDAQ off 15. S&P, a little bit of volatility, but not too much. Liquidity plentiful in the market. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com.
or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to Terrific Tuesday, folks. Don't forget the full lineup for you as we do each Tuesday. Basil Chapman, following this show, he's going to take you on a ride. He's got his surfboard out. I can see he's polishing it right now. Big waves out there, so he's going to take you for a ride on the Chapman wave. And then after Basil's show, we've got the Options Hour out there. Great show. Then we've got followed by Daryl Martin, David White's show, Andy Heck from 3 to 4, and then Tom O'Brien show, obviously, from 4 to 6 out here. A quick check in on the NASDAQ, the 120-minute chart out here, NASDAQ futures. Nice, strong, bullish mode out here. So whereas we've seen some cracks in the armor inside the Dow's a weak link as we speak right now. No cracks in the armor when it comes to the NASDAQ out here. Will the market really turn lower without the NASDAQ? Nah, I don't think so. So the NASDAQ here, as we speak right now, the Qs, we took a look at the Qs. They were moving into a swing point with volume. And that said that at least the top of it, the high wanted to be tested out there. My own personal view of the market is that this one is, there's, as I mentioned, the market can do one of three things, right? Sideways, up or down. there's really always three trades that you can always make. It depends on your time frame. In your time frame, if you're managing long-term funds, forget about all this fodder and the daily nonsense and noise that maybe we give to you. Instead, focusing on what the weekly charts are communicating to you. If you do that, you will be much better off out there, because all the other stuff, it's just really noise out there. However, if you're not in the market and you're trying to figure out where to get in and what to do, remember there's always three trades: long, short, or cash. And never, ever forget that cash is a trade out there. And we've got markets that truly are a bit confusing. And when they get confusing, that's a time when you start to say, geez, the direction here is really a little murky out here. Therefore, guess what? Cash is a position. And I'd suggest to you that right now, cash is a pretty good position out here. Let the markets get some legs one way or the other out there, and then start putting that money to work. In the first hour, what we took a look at here was just normal patterns with inside the real key chart, which is the currency pair, the Euro-Japanese yen, just simply because of how it tracks the U.S. stock market. At this stage here, it hasn't found its legs to form a bottom. It can. It's got two beautiful patterns that it's trying to do that with, either your 0.618 or your 0.786 currently buy pattern. That's what it's trying to do. Hey, those patterns can fail, which means they never really come to fruition, and then you see 100% move all the way down to 136.22. If, however, because you are in the oversold condition, we do see a bullish reversal signal, and we start to see some type of decent candle that is formed out there. I will tell you what, those islands that we have inside the New York Stock Exchange, which is bearish, it is absolutely bearish on the daily chart out there. In fact, let me put the NYSE up here. Let's put the Rose Momentum Indicator out here, because, as I've said, it would be pretty foolish for me to say, hey, from a long-term standpoint, you should focus on the weekly chart, and then I don't even put the weekly chart up for you to look at. Let's look at both. So on the daily chart, we got an island reversal. Absolutely. Most bearish pattern that is out there. But I got to take a look at the Trump card. The Trump card is not Donald Trump. It's the Euro-Japanese yen. The printing presses, the carry trade, however it is you want to look at it. And even though we've got that, we have that island reversal, man, on the weekly chart, all we've got is a little bit of resistance here at this shooting star. So from a longer-term standpoint, you can get rid of that noise out here. At this stage here, you haven't really seen a breakdown inside of the NYSE, folks. So have a terrific Tuesday. As always, thanks so much for joining me. A pleasure to be here with you. Have a great day. I look forward to seeing you nice and early mañana. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.